Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Now, yet equity markets ripping higher from the overnight. The news, U.S. and China, trade talks back on, everything moving down that path that was set at the summit. But a lot of that is dissipated. You're seeing either profit taking, you have resistance, major three-star resistance we had in the S&P held. It did shoot up just above it, but ultimately that level, 2671, was a very big headwind for the market to push above. And then you got this back and forth going on in Washington that's definitely not helpful here. Our momentum indicators in the S&P, the market's kind of pushed below it a little bit, but we're testing into a pocket of support, a big battleground, 2626 to 2636. However, we've been looking at the NASDAQ very closely here over the last 24 hours, really through the end of last week, because it's been more constructive to the ultimately not bad. You know, you've seen the S&P trade down and make new lows. The NASDAQ has been more constructive than that. We wouldn't call the overall tape a positive tape, but again, more constructive. The NASDAQ, though, has a lot of support right into about 6690, 6700. We're testing into there. This level holds through the afternoon. We can start to see this sort of lift off. But if the NASDAQ gives on that area, then you can start to see more profit taking. We could be in sort of a move down into the close. Again, we're going to give this the benefit of the doubt. We think there's support here in the S&P and in the NASDAQ do hold. But give our trade desk a call for any questions with these levels that we're watching. Moving on to crude oil, it ran into that patch of resistance about 52.5. Now we had the first key level, 51.94, and we talked about it, just a couple levels up in there that this market's going to have a tough time to get out above there until the fundamental picture changes just a bit or get a little more certainty on the EIA report that we see here tomorrow. But ultimately, again, those tailwinds that dissipated in equity markets, global risk appetite, have brought crude back in a little bit. Watch this area, 51.5 on the day. We said we did not want to see it below 51, and that was before the market did shoot back out above about 51.5 at that time. But lastly here, we'll move on to gold, and it's that sticky resistance area, major three-star resistance. It's not pushing out above there, it's staying there. We like gold, but we think the pullbacks are going to be where you want to look to be a buyer. Right now, holding it back is the dollar. You're seeing strength in the dollar index right now, given the weakness in the euro and the British pound to do the headwinds on Brexit. Give us a call. We're here to help with anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thank you.